Imagine walking into a large, bustling city. There's movement everywhere, people going about their daily lives, businesses operating, money changing hands. The city hums with activity. But have you ever stopped to think about what makes this all possible? What allows people and businesses to come together and exchange money so seamlessly? What ensures that the gears of our economy keep turning smoothly? The answer lies in the vast network hidden beneath the city's surface, a network of banks and financial institutions. In this episode, we want to lift the lid on this secret world and show you how the banking system operates. Our goal is to demystify the inner workings of banks, helping you better understand how your money circulates throughout the economy. And if you stick around until the end, we'll reveal some lesser-known facts about banks that you might not know. So get ready to unlock the secrets of the banking system and discover how this intricate network keeps our economic wheels turning. But how does it all begin? Let's start at the beginning, shall we? It's time to talk about the history of banking. From its humble beginnings to its current state, banking has come a long way. In the past, money used to be stored in homes or businesses. Then people started using banks as safe deposit boxes for their valuables. Over time, banks evolved to handle more functions like issuing loans. Today, they facilitate billions of transactions worldwide. These institutions are the backbone of our global economy. So let's dive into what banks do. They help money flow smoothly, allowing people and companies to make payments, receive funds, and save money. Banks also offer various financial products like mortgages, loans, and credit cards. Plus, they provide essential services like foreign currency exchange and safekeeping of valuable items. Banks play a vital role in investment by offering services like brokerage accounts and investment advice. They help people invest their money wisely. Now let's talk about how banks work. At its core, a bank is a financial institution that provides services to individuals and businesses. Their main function is to facilitate transactions involving money. When you put your money into a bank, they keep it safe and pay you interest for keeping it there. Additionally, banks offer various financial services like loans and credit cards, helping their customers meet their financial needs. To stay profitable, banks engage in activities such as lending money and investing in financial markets. Let's delve deeper into the crucial functions performed by banks. Firstly, banks act as intermediaries, channeling funds from those who have excess money to those in need, driving economic growth. Secondly, they manage risks by diversifying investments and offering insurance products, providing financial security. Thirdly, banks promote financial inclusion, ensuring that individuals and businesses have access to essential financial services regardless of their background. Finally, banks play a vital role in facilitating international trade by providing foreign exchange services and connecting businesses across borders. Next, let's discuss the key features of the banking system. The banking system is a vast network of financial institutions that work together to provide services to individuals, businesses, and governments. One of its primary features is the presence of central banks, which are responsible for regulating and overseeing the entire system. The central bank, often referred to as the country's banker, plays a critical role in maintaining the stability and integrity of the financial system. It formulates monetary policies, manages the currency, and acts as a lender of last resort to commercial banks. Another key feature of the banking system is the existence of commercial banks, which are financial institutions that accept deposits from customers and provide various banking services such as loans and credit cards. Commercial banks play a crucial role in channeling funds within the economy, facilitating transactions and providing financial services to individuals and businesses. The banking system is also characterized by its regulatory framework, which is designed to ensure stability, fairness, and consumer protection. Regulatory bodies set rules and guidelines that banks must adhere to, ensuring that they operate in a safe and sound manner. These regulations cover various aspects of banking, including capital requirements, liquidity ratios, and consumer protection measures. The banking industry is highly competitive, with numerous players offering a wide range of financial products and services. This competition encourages banks to innovate and provide attractive offerings to customers, while maintaining financial health. Technological advancements have significantly impacted the banking sector, leading to the emergence of digital banking and online services. Banks now offer convenient and accessible ways for customers to manage their finances, such as mobile apps and online platforms. Lastly, the banking system plays a vital role in promoting financial inclusion by ensuring that individuals and businesses have access to essential financial services regardless of their background or location. Banks are increasingly focusing on serving underserved populations and providing them with the necessary tools to manage their finances effectively. Before we move on, here's something interesting. The word bank itself has an intriguing history. It originated from the Italian word banca, which initially meant a bench or table. This is because early bankers used to conduct their transactions while sitting at a bench. Much like a marketplace, over time, the meaning of the word evolved, and today we associate it with financial institutions. Now, let's talk about some important concepts related to banking. First up, we have fractional reserve banking. This is a system where banks keep only a fraction of their deposits in reserve and use the remaining funds to generate profits through lending and other activities. It's important to note that banks must maintain a certain reserve ratio set by regulatory authorities to ensure they have enough liquidity to meet withdrawal requests. Next, we have asset liability management, which refers to the process of managing a bank's assets and liabilities to ensure its financial health and profitability. Banks must carefully balance their investment strategies to generate returns on assets, while managing risks and ensuring sufficient liquidity. Moving on to risk management, banks are exposed to various risks, including credit risk, market risk, and operational risk. To mitigate these risks, banks implement risk management strategies such as diversification, hedging, and insurance to protect themselves and their customers. All right, let's chat about the different types of banks. There are several types of banks, each serving different purposes and catering to specific customer needs. Let's explore some of the common ones. First, we have commercial banks, which are the most prevalent type of bank. They provide services to individuals and businesses, including transactional accounts, loans, and credit cards. Commercial banks play a vital role in facilitating everyday financial activities. Next, we have investment banks, which specialize in assisting with financial transactions, such as mergers and acquisitions, underwriting securities, and providing investment advice. Investment banks typically work with corporations and institutional clients. Then there are retail banks, which focus on providing financial services to individual customers rather than businesses. They offer services such as checking and savings accounts, mortgages, and personal loans, catering to the needs of everyday banking consumers. All right, let's talk about some interesting facts about banks that you might not already know. Banks have the power to create money through the process of lending. When you put your money into a bank, they can lend a portion of it out, creating new money in the form of a loan. This allows banks to generate profits while increasing the money supply in the economy. Banks primarily rely on customer trust to function effectively. If people lose trust in the banking system, it could lead to a loss of confidence and potentially severe consequences. Therefore, banks work hard to maintain trust through transparency, reliability, and strong customer service. Banks play a crucial role in stabilizing economies during crises by providing emergency loans and financial support to individuals, businesses, and even countries during difficult times. Banks can help prevent economic downturns by ensuring that businesses have the necessary funds to keep operating and people have access to emergency funds. Banks are required to maintain a certain level of liquidity to ensure they can meet withdrawal requests from customers. This means that a portion of customers' deposits must be kept readily available to be withdrawn without delay. The required liquidity levels are set by regulatory authorities and are designed to maintain financial stability. All right, moving on, let's discuss the future of banking. The future of banking holds exciting possibilities driven by technological advancements and changing customer expectations. Here are some key trends shaping the future of the industry. Firstly, digital solutions will continue to transform banking, making services more accessible and convenient. Customers will expect personalized, user-friendly experiences through mobile apps and online platforms. Secondly, financial inclusion will become increasingly important as banks strive to reach underserved populations and provide them with essential financial services. This will help empower individuals and drive economic growth in new markets. Another trend is the growing importance of data analytics and artificial intelligence in the banking sector. Banks will leverage data-driven insights to develop innovative products, improve customer service, and manage risks more effectively. AI-powered chatbots and virtual assistants will enhance customer engagement and provide personalized financial advice. Sustainability is also becoming a key focus for banks as they consider the environmental and social impact of their operations and lending practices. Banks will play a crucial role in financing sustainable projects and supporting businesses that prioritize ethical and environmentally friendly practices. All right, we've explored the inner workings of the banking system and the key factors that drive its operations. Now let's hear from you. Do you have any questions or want to share your thoughts on the banking industry? Drop a comment below and let's engage in a conversation. And if you enjoyed this video, don't forget to hit the like button. Subscribe to our channel for more informative content. Thanks for joining us on this journey to unlock the secrets of the banking system. Until next time.